Good evening, everybody. This is Johnny Seville with your executive summary for stock setups for Thursday, the 9th of February. And as you can see, the market has continued to kind of move sideways, bouncing a little bit off of the support today with mediocre volume, 3.61 billion on the S&P 500. And we talked about the high-yield bonds last night being quite dangerous in the way that they were looking like they were about to break down. As you can see, we did break down through that support level and spiked up with the hammer candle today. So we may be clinging on so that open range can continue to be bullish until options expiration Friday next week. But we'll see what happens. Right now, we could get a little bit of an up spike, kind of hold in this range, then a breakdown. Often with these kind of channel breakdowns or upward types of oscillating patterns, we do see this type of clinging on to the resistance for a little bit until the major break occurs. Of course, this break would indicate breakdown towards 85.50, which is what we're kind of waiting for at this point. So so far, it's still a market of individual stocks. If we have a look at the individual stock index, if we look at stocks actually in the S&P 500 that are above or below their 50-day average, you'll see that, again, as we indicated the other night, stocks that are above their 50-day support are down from 80% to 52% now. We had another big drop today, which it slightly recovered from. We're down negative 1.88%. It was much lower in the early parts of today, but certainly indicates that we're having some pressure in the market. So again, we're looking for those stocks of individual strength. A couple of the stocks from our newsletter that are noteworthy to mention. NVLS. NVLS, as you can see here on the screen, has just started to break through some of its resistance. This was originally an entry signal which we had back at $2.18 back on December 28th. But as you can see, if this starts to recover, so what we're looking for here is a break of about 253 would be the confirmation. That's the high of these recent candles. That should be able to give it some steam to start moving upwards. The next one that started to make a move today, CNAT. Now, this was originally looking for a break at higher highs here. As you can see, it was originally a flag formation that's now pulled back. Maybe flagging now. So this might be ready to go. So I would look at an entry signal here with a break of 514 and look at a short-term target of $6.11. Again, it could possibly go higher, but I would obviously look at that depending on which way the market starts to go. And I'd look at a stop signal here of 457. So you can see again the money flow also holding in strongly there, and again the moving average is giving support. On the short side, XYL, which is one we looked at quite a while back, may now actually be breaking down underneath resistance. I'll give you a little bit of perspective there. You can see it's kind of it rallied up, broke through, and has been bouncing along underneath this kind of resistance zone. It now seems to be potentially bear flagging. We went from 2.14 million to 3.27 million and at 1.84 million and then 1.61 million, so that the volume has remained fairly strong with that downward pressure. So if this breaks below 46.63, this could be a drop down towards the target of $40.63. Now, the $40.63 criteria we'll come back to in a second. That's based on a weekly chart. But in terms of the stop criteria here, I'd look at a stop criteria around 49.13, 49.17. Now, the target is based on a Fibonacci retracement from the lows here in January. As you can see, the 38.2 has shown itself to be fairly well in place there with that bounce back there. So we're looking at a 61.8% drop, which as you can see is at $40.58. So we're just looking a little bit above that. Okay. So there's XYL. Now, one other short on the watch list here is LSCC. Now this is interesting again, going back to the weekly chart actually. You can see that we've got a nice looking potential drop here if it breaks down below this trend line. So this is one that's definitely on my watch list because of this sharp divergence, but it's a little far off, so this is one I would put on my watch list. And the other one, LKQ, might be a little closer to a potential trade. So as you can see here, with LKQ, these are setting up in a possible head and shoulders pattern on the weekly chart. As you can see here, we've got the left shoulder, the head, the right shoulder, and now coming back down to test. So if this one were to break much far below the $30 price point, this could also be an excellent short. So two ones that we have on our short list there to add to the short watch we talked about yesterday being HOG. I would add LKQ and LSCC to ones that we should be definitely keeping a close eye on. So there you go. Alrighty. Now, moving on, we'll go to RMBS. Now, these are a few from the existing stock newsletter. Rambus has had another great decline today, down from the 1360 entry signal. Has just continued to drop. Of course, that sharp oscillation level there that it could have bounced off has failed, which means it's probably headed down towards this $11.83, $12 area we've been talking about as a target. So that's looking good. Of course, the money flow is declining nicely along with it, so that's strong. DPLO on the long side also looking good. Still waiting for this to break through the 1510 area we talked about last night, or again the more conservative criteria of a break of $16.13. But as you can see, the money flow has taken off again today, despite the consolidation candle. So that one's holding there. VIRT. This one, of course. Again, the kind of long breakout type. We really want it to break through 19. This is closed bullishly after breaking through the entry criteria of 1857. Money flow is doing well, so this one's certainly got the criteria of momentum as it holds on to those moving averages moving up. Taking a look at US Steel X. United States Steel Corporation. Again, we can see this consolidating this downward channel as part of a larger expanding range channel, both of which being bullish patterns by pattern standards. Of course, what we're really waiting for here is a break above the above this resistance here, and if it does, we look at the March $33 calls, which would probably do well if it breaks above 36. That should at least give it the strength to get up to around the $41 price. So keep your eye on X as a possible long. ECPG also holding support very well. This one's broken out of what could have been an upward channel. I'd be very wary of this $34 price range, which is the criteria from that break from the rising or ascending triangle we talked about here, which as you can see is made up of that bold line with that orange line. Measuring that gives us a target of up around 35. 34 may be where it gets long in the tooth, and when we start to see a rounded top and it start to pull back as kind of an inverse fallen angel. But moving strong so far, obviously up from that $30.57 entry signal. ARDM, awesome move. Up from the 189 entry signal. Of course, we talked about the $2.20, excuse me, $2.27, $2.23 type of target as a short-term profit-taking opportunity in trading room last night. It hit $2.30 today intraday and pulled back. So if you took some profit there, well done. At the moment, this may start to roll over, so I'd be very protective of that and just be cautious with the longs in that situation until we see another day of bullish action. INOV. Also moving really well. This one bounced through the 50-day resistance. The volume still needs a bit more conviction. Yesterday was 836,000 on the down. Today 689,000 on the up. We need probably another day of better volume to really believe in this. But $13 and upwards is the where we expect this or hope for this to go. And last but not least, PVG, Pretium. Of course, this was also doing really amazing. It hit its exit signal criteria a couple of days ago at 12.03, obviously up from the 8.50 entry signal. That's done really, really well. But again, you can see that pattern really in shape with a possible flag formation building here. So if it breaks much higher than 12.50, we could be seeing another probably $1.50 from there. So if it breaks above 12.50, look for 14 as a target, but it's certainly it certainly hit the targets we talked about when this came about around early January. So there you have it. That's your executive summary for tonight. And again, if you are not a fully fledged member of the Acorn Executive Summary Service, you can try us out for $9 for your first month by simply going to acornwealthcorp.com/gold. And look forward to seeing you in the next executive summary and the trading room, of course, tomorrow night being Thursday. So we'll see you there. Have a wonderful night and happy trading.